Being a solutions company expressed through food, like, come on, that's ridiculous. Well, that was just a couple of months back that they refocused their entire company on an investment vehicle for cellular agriculture. But then here you can see marketing and investor relations activities for $500,000. That is more than they planned to invest in that time. On December 31st, they had total assets of $16,000. Hello world! This is the Impact Investing Show, where we think and learn about how to save the world and improve the lives of all conscious creatures by acting today and investing into the future. I'm Leonard Shelter, welcome to the show. And today it's gonna be all about investing into the future. Tomorrow, Cult Food Science will go public and is a great opportunity for us retail investors to get more exposure to the market. It's gonna be a technical video about all the financials of the company, the portfolio companies, what to expect from the IPO, and a comparison to Agronomics in the end. So if you want to skip around, feel free to use the timestamps below, and let's get going. Cult Food Science is going public on the Canadian Securities Exchange this Monday, January 17th, 2022, which is tomorrow at time of recording. So it is high time to cover the company and see what their portfolio looks like, their financials, to help you decide if you want to invest in the Cult Food Science IPO or not. It is definitely a great step for the space because Cult Food Science, as we will see later, offers a new vehicle for investment for retail investors with new companies and a new portfolio strategy that is somewhat different to Agronomics, for example, and it just offers more options for us retail investors. So first up, let's look at what Cult Food Science actually is. Cult Food Science on their website state that the future of food is cell-based. Nothing new here, much of us believe the same thing. They state that Cult Food Science is an innovative platform advancing the future of food with an exclusive focus on cultivated meat, cultured dairy, and cell-based foods. That sounds really awesome. That's exactly what we want to hear. The first of its kind in North America, Cult Food Science provides investors with unprecedented exposure to the most innovative startup, private, and early-stage cultivated meat, cultured dairy, and cell-based foods companies around the world. Even more amazing news. So let's check out what that actually entails. Cult Food Science consists of three branches, basically. The first branch, Cult Food Science, is their investment vehicle that you can buy on the stock exchange and you get exposure to private companies that they have invested in. The second branch is the Cult Prize. The Cult Prize is a program that funds very new startups and early ideas for developing cellular agriculture with a $1 million grant over 2 years. So that is great that they do that. That gives motivation to young entrepreneurs and young scientists and gives some funding for early ideas. The second branch is CellX Technologies. That's sort of their technology platform because they want to leverage their IP in intellectual property and their research from all the companies that they've invested in and try to bring that together and use synergies and so on. So they have this CellX Technologies platform. They're not just a passive investor, but they want to help their companies strategically, but also with their scientific exchange and so on. But for us investors, probably the most interesting part is still the investment part. So what is their portfolio currently looking like? This is the Cult portfolio as it stands today. They have 13 investments in different companies, and we cannot go into all of them in detail, but we can go through them and I will show you that they cover basically the entire sector of cellular agriculture. So there are obviously companies focused on traditional, so to say, cultivated meat. Novel Farms, for example, produce whole cut steaks and pork, and they focus on whole cut meats through tissue engineering. Then there is Mogale Meat. They are located in South Africa and they focus on local species in Africa. So they work on antelope meat, for example. There is Ohio Valley. They produce Wagyu steak, which is supposedly the Rolls-Royce of steaks. I haven't eaten meat in many years, but Wagyu steak is pretty fancy up there. Then there is 3D Biotechnologies. They also focus on tissue engineering for leather, but also for culture. And then there is Meatech 3D. They are listed by themselves on a public stock exchange. They're from Israel, and they focus on 3D printing whole cuts of steak, for example, but also chicken. Then there are companies focusing on eggs. So Fiction Foods is sort of the flagship investment of Cult, and it's not really clear what they produce. I'm going to get back to that later in the statement for listing. They have a weird description of their company, but I suspect that they do like a whole foods drink, like a whole meal in a drink sort of thing. And then there is Eat Just, of course, you know them from their mayonnaise and their egg replacements, but they also do chicken. They already have cultured chicken on the market in Singapore in a restaurant, and they were pretty much the first to market with cultivated meat actually being sold to end customers. Then there are Cell Egg Tech and Umami Meats. They are both focused on seafood. Better Milk is the next one. As the name suggests, they produce cultivated dairy. Biftech and Gelatech are especially interesting, I think. They are not producing products for end consumers, but they are B2B businesses. So Biftech produces a non-animal and GMO-free growth medium alternative, which is basically needed by almost all of these companies to grow their cultivated meat. So that's an interesting play, I think. And Gelatech produce gelatin and collagen, which are also two B2B products that are included in many, many industrial products, but they're not marketed to end consumers, but more to a B2B basis. So I'm really excited for these two companies because they have potential to work with all of these other companies supplying their products. And then finally, there's Melibio. They focus on cultivated honey using microorganisms instead of bees to produce the honey, which is also interesting. So remember I told you that Fiction Foods has a funny description of what they do and that I don't really know what they do. On the website of Cult Food Science, you can see in their portfolio tab, they feature Fiction Foods quite prominently. As they say, they are the lead investor, and Cult Food Science led and was the sole strategic investor of Fiction Food's seed round. So Fiction Food, according to their own description, is a solutions company expressed through food. Like, what does that mean? Fiction leverages emerging technology to help us construct a transparent, intelligently designed, smarter food system that comes at a lower environmental cost than the current while returning significantly more nutrition. Yeah, that sounds great, but what do you do? According to this bottle here, I think they do some sort of drink, but I don't know what you mean by Fiction is a solutions company expressed through food. Like, come on, that's just nonsensical garbage. What the hell? Anyway, I like the founder, Brendan Brazier. If you're in the vegan space, you probably know him. He's an interesting guy, and he co-founded and successfully sold and developed the company Vega. So I'm hopeful for this company. But they probably don't want to say what they do, I don't know. But being a solutions company expressed through food, like, come on, that's ridiculous. Anyhow, back to the topic at hand. Hearing the names and hearing what they do about these companies is always great, but let's check how they compare to other companies in the cellular agriculture space. So here you can see the newfarms.io website, which I can highly recommend. It's a website that covers many companies and collects data on when they were founded, how much funding they secured, and so on. So it's always interesting to compare the companies, use it as a rough guide, but it's interesting to look at it nonetheless. So in terms of funding secured, the most funded company is Perfect Day currently. But we can scroll down and see that already at position 3 we have Eat Just, or Good Meat, which Cult is invested in. So that is great. Eat Just is an OG in the space, founded in 2011 with $267 million in funding. So they have a lot of money on hand. Then scrolling further down, we have Meatech 3D right here. They are listed as on their own on a stock exchange, as I said, but they have only 68 million. So they are already significantly smaller than Eat Just. And founded in 2019, they are much younger as well. And then you have to scroll quite a bit through all of these companies until you find the next company that Cult is invested in. So here you can see Novel Farms is the next one. It has a funding of $1.7 million, according to this newfarms.io website here, which is tiny compared to Eat Just and to Meatech 3D. And they've been founded in 2020, so it's understandable that they are still small, but nonetheless it's a really small company compared. You have Ohio Valley here, Melibio, Biftech, all portfolio companies of Cult, and they are all quite small in comparison. So all funded in 2020 with $1.5 million in funding, $1.1 million. So they are not that big. They are really early stage startups. If we scroll further down, we have Mogale Meat here. They have received only $50,000 in funding, supposedly. I know this is not true because we can see in the listing statement that even Cult has invested much more into Mogale Meat. But there are two more companies, Cell Egg Tech right here, and then down below 3D Biotissues, where the funding is unknown. So we can see from this list that the companies are comparatively small and young compared to these bigger space companies like Eat Just and Mosa Meat, for example, Blue Nalu and Meatech. Now let's actually look at the listing statement and see in detail what these portfolio companies entail and how much was invested by Cult. The listing statement is a required document in order to be listed on an exchange, and it holds all the financial information on the company regarding the directors, the management, future plans, liabilities, risks, and so on. It's an interesting document, but it's 159 pages of financial statements. So I read through all of this, so you don't have to. And guess what kept me going? The thought of you clicking the like button, because you don't have to read all of that. Under material assets and investments, we can see the investments that Cult has made to date. So if we start here with Mogale Meat, you can see that Cult invested $450,000. Remember, on the new Farms.io website, it said just $50,000, so this is a more accurate number at least. So they've probably received much more than $450,000 because Cult was not the only investor. Scrolling further down, you can see the ownership percentage. This is a very interesting number. So Cult owns 6.4% of Mogale Meat. I think this is a good size for a stake, because with this amount of ownership of the company, they can actually influence it a little bit. They have some voting rights and so on. So they're not just along for the ride, but they actually have some influence on the company. So an ownership stake of around 5% or more is always good. Next up, we have eJust, the biggest company. But of course, with an investment of $273,000, you don't get much of eJust, so it's below 1% of the company that is owned by Cult. So this is really more of a passive investment, as they state themselves here. But it would be great to have more stake here, but obviously that is more expensive as well. Novel Farms, we have less than 1% as well, with a $150,000 investment. Cell AgTech, ownership 3.8%, that is okay, that's a good number. Biftech Inc., also ownership percentage stake 1%. Meli Bio, the honey company, 1.7% ownership. Ohio Valley, 1.25%. Then we have BSF Enterprise. That's actually a little difficult. They have a SPAC. So BSF Enterprise is just another investment vehicle that is in the process of acquiring 3D Biotissues Limited, a private company headquartered in Newcastle. So this is basically an indirect investment into 3D Biotissues. And they own 1.6% of this SPAC. Then Fiction Foods, you have 2.5% ownership. Gelatech, less than 1%. Better Milk, 2.5%. And Umami Meats, finally, 1.3%. So I'm not too happy with these ownership stakes. They're all quite small. I would wish for more in the range of 5% or even upwards a little bit. But given the size of Cult Food Science, they don't really have the cash to buy much more of these companies. So I think they value diversification across companies higher than getting a higher ownership stake. So to summarize the portfolio part a little bit, Cult offers exposure to basically the entire sector with cultivated meat, cultivated dairy, even exploratory things like honey, but also B2B businesses, which I find especially interesting. Their ownership stakes are rather small, around 1 or 2% in most cases, which is not ideal, but I guess the diversification is more important here actually. They have eJust and Meatech 3D, which are two really big players in the space. All the other companies are very young and very small, so we really have to see what they will develop in the future and how that will play out. But how is Cult Food Science actually funded, and what is their history? So we can also go back to the listing statement for this information. Under point 3, in general development of the business, you can get some history on the company, which is quite funny actually. So the company was incorporated in November 16, 1983 already. So it's a really old company. And they were actually involved in transportation, and they were shippers of bulk commodities in need to transfer product between modes of transportation. So they did something entirely different to investing in cultured meat companies. And they changed quite a bit, so they wound up its transloading business and disposed of substantially all related assets in the year ending December 31, 2010. And they basically gave up this transportation business and then reoriented in August 2021. So that's not been a long time ago. That was just a couple of months back that they refocused their entire company on an investment vehicle for cellular agriculture. So that's really quite new. In section 10, description of the securities, you can see how they are actually funded. So scroll down a little bit, you have prior sales. This is basically all the stock sales that they did in the past to finance their company and their investments. So here you can see as of January 5th, 2022, the total issued and outstanding share capital of the issuer consisted of 139 million shares. So that's all the shares outstanding at the moment right now. And you can see an entire history of all the shares that they sold. So they started in May 29, 2021. For 1 cent, that is always Canadian dollar cent, you could get 10 million units for a debt settlement. And then you can see the more recent rounds here. It went up to 0.33 cents per share in their latest stock offering. And you can see most of these offerings were private, of course, or stock options probably given to management, directors, and so on. So the big financing rounds here you can see is 8.6 million units at 0.25 Canadian dollar cents and 10 million units at 0.25 Canadian dollars. So if you calculate 10 million units at a quarter of a dollar, you get around 2.5 million Canadian dollars here in funding. This round, just a couple days earlier, 2 weeks earlier, was around $2 million. So these were the big funding rounds and private placements that they did in order to accumulate the cash that they now have. So how much cash do they actually have? What about their financials? Let's check it out. Under Section 5, Selected Consolidated Financial Information, you can see all of their financials on a year-to-year basis. So you start here on the very right for the year 2018, which is not that interesting to us because, as we've seen, they only really started this cellular agriculture investing thing in August 2021. So let's look at that. On December 31st, 2020, they had total assets of $16,000. So they were basically asleep. It was just a nascent company, not doing really much. And then on September 30th, 2021, that is more recent, after the first financing rounds, they had total assets of $7.5 million. That is not huge, but obviously it's enough to do some investments in these early startups. But that kind of explains why they don't own more of the companies, because they just don't have that many funds available, as for example Agronomics has, which is much bigger. But of course we also have the current numbers. So these numbers here are from December 31st, 2021. So that's just 2 weeks back. So this is pretty much the current state of the company at their IPO. So you can see they had available working capital of roughly 2 million Canadian dollars again. And they plan to use $50,000 on estimated remaining costs of the listing statement. Then additional investments of almost $500,000, which is always great. We want to see more money invested. They have operating expenses for 12 months of $1.2 million. Now that is quite a lot, I think, especially if the investment is only $450,000. So the subtotal comes down to 4.3 million with an unallocated working capital of $280,000. So you can see where they spend the money on further down below here. So operating expenses 2021 to 2022 budget. They have wages and salaries. They have to pay their directors, of course. $350,000. It's okay, I guess. Administrative costs, of course. But then here you can see marketing and investor relations activities for $500,000. That is more than they plan to invest in that time. So I don't know if you're happy about this. I don't really like this. I don't like the marketing part that much. I would rather that they invest this money into more companies or get higher ownership stakes of these companies instead of doing marketing and investor relations, really. Overhead costs, of course, always happen. And then professional service fees, $250,000. That is stuff like lawyers, accountants, and all that sort of thing. So they spend $1.2 million in operating costs while only investing $450,000 at the same time. I don't know if I'm happy with that. I think they could definitely cut down on the marketing. I don't really like that. I would see them investing more. That would be better for me, from my perspective. But obviously, make your own mind if you like this or not. The thing is, the unallocated working capital is only $286,000, which means they have to fundraise quite quickly again. So they have money for 1 year basically, and then they're out of money. So they need to do a dilution of shares and a new fundraising very soon in order to keep going and keep their operating expenses running. So dilution always means that your shares lose value or you have to buy new shares. So keep that in mind. They are planning for a year or so in expenses and need to do a fundraise after that. Next up, what about the management? So ideally, we would like to see a management or a board of directors with some scientific background in cellular agriculture. That's rarely the case, but that would be the best case because they really understand what the companies are doing and they have scientific background or are engineers themselves. That would be awesome. It's rarely the case, but let's see. And we can also get this information from the listing statement again. Here we are in the investment experience section. So there's actually an entire paragraph on the investment experience of each of the 5 directors of Cult Food Science, which is amazing, I think. But you can see, if you read through this yourself, you can see that none of them is a scientist or engineer for cellular agriculture. They are serial entrepreneurs here. Dorian Banks, the CEO. Then you have Francis Rowe, a partner at Dixon CPA in Victoria, where he provides accounting, tax, and business advisory services. Kirill Company's director, he's a lawyer, recruiter, and business owner. You have Patrick O'Flaherty. I'm sorry if I butcher your names. Mr. O'Flaherty is a chartered accountant and a chartered financial analyst. And then you have Matthew Roma, the director, a chartered professional accountant. So you can see they are all probably very good with their numbers and they know what they do in terms of investing. But sadly, none of them has a scientific or engineering background in cellular agriculture, which would be even greater. But they have an entire committee of advisors that are from the cell ag space, so that will make up for that, I think. Another important point is the skin in the game. Do the directors own the companies or not? And that means, are they afflicted if the company fails or not? And are they incentivized to do the best for the company long term? Let's check that out. There is information on that as well. If we skip to escrowed securities here, you can see that Dorian Banks and all the other directors received stock options. But it's only 50,000 stock options. So that's not that much. And you can see here, it's 0.39% of stock options granted. And Patrick O'Flaherty received 1.17% of stock options granted. Under principal shareholders down here, you can see this as well. As of the date of the listing statement, no person beneficially owns directly or indirectly or exercises control or direction over more than 10% of the issued and outstanding shares. That means there's no person that owns more than 10% of Cult Food Science, which is good in terms of management and voting because no one person has control over the company. But it also means that none of the directors and management team have a big stake in the company, meaning they have skin in the game and have an intrinsic motivation to make the company successful beyond their employment in the company. Scrolling further down, you can see another table here where it specifies the number of shares that these people hold and the number of stock options that they have been granted. So you can see that none of them actually own any shares yet, and they all received stock options. But it's small numbers. It's 100,000 stock options, 50, 150,000, 50,000. So they're not really invested in the company from a financial perspective so far. Regarding the principal stakeholders, there is some more information here on the capitalization. So you can see the number of securities non-diluted is 139 million. We've heard this a lot now, the number, that is the number of total outstanding shares at the moment. Number of securities fully diluted is 286 million. This means including all the warrants and stock options that have not been exercised yet. So fully diluted, they have 286 million shares. And then we can see this category right here, which is interesting. Held by related persons or employees of the issuer or related person of the issuer. So this basically means the people that invested privately into the company and that are somehow connected to the company. They are either employed or relatives maybe of the founders or something. And they hold 52 million shares. So that means total public float is only 87 million. But then when you look further down, the number of outstanding securities subject to resale restrictions. So these are not freely tradable shares is 99 million, leaving a total tradable float of only 39 million shares. So that means out of these 139 million shares, only about 40 million are really freely tradable on the stocks without any limitations as mentioned here on the resale restrictions. And the last interesting point about the management is their time allocation. Obviously, none of these people in the management are full-time employees of Cult Food Science. They all do other stuff on the side. And we can see this in the listing statement, how much they expect to use their time to work at Cult Food Science. So Mr. Rowe expects to devote 30% of his time to the affairs of the issuer. Dorian Banks expects, where is it? Here, expects to devote 30% of his time to the affairs of the issuer. Then there is Mr. Kompanietz, sorry for butchering the names, will devote 10% of his time, Patrick O'Flaherty 10% of his time, and Matthew Roman also 10% of his time. So this doesn't sound like a lot, but I think this is fine. This is very usual for these investment companies, and it's totally fine if they work other jobs beside that. They have to make their investment decisions, and it's not every day that they get exciting decisions and they have to do their due diligence. When an interesting company comes along, they have like a more intense period of working and deciding to invest or not. But then there are some times where they are not needed on a day-to-day basis. So I think allotting these 30% of their time or 10% of their time is totally fine. Now let's look at the future plans of the company. What have they in store for us? So here we can see again from the listing statement the milestone description that they are aiming for. So they want to create an advisory committee of experienced industry consultants, which is estimated to cost $200,000 for Q1 2022, so pretty much now. And they also want to deploy an additional $450,000, as we've seen in the financial statement already, over several unique investments per the company's investment policy. So that is planned for Q2 2022, so fairly soon as well. And use of proceeds from the IPO is also interesting. The company is not raising any funds in conjunction with this listing statement, meaning that their IPO now tomorrow does not issue any new shares and they don't raise funds using this IPO. But what can we expect from the IPO? Let's have a look at these numbers here. So the total assets of the company are 7.5 million Canadian dollars roughly, and the outstanding shares are about 140 million, but the freely tradable float, as we saw earlier, is only 40 million shares. So we had some private financing rounds, and we've seen one of the first ones started at 1 cent or here 2 cents in August 2021. That was really cheap. And then they had rounds for 0.25 Canadian dollars, and then the final rounds were all at 0.33 Canadian dollars per share. So I would estimate that this is the absolute minimum price you can expect at the IPO. It will not list any cheaper than this, I think. But what about Agronomics? Let's compare it to Agronomics, the other large investment vehicle for retail investors in the cellular agriculture space. And here I prepared a short comparison on some categories between Cult Food Science and Agronomics. So you can see the market cap for Cult Food Science is not yet clear because it's not publicly listed yet, but we can estimate that it's probably going to be at least $7.5 million because that's their total assets. So ANIC, Agronomics, has a market cap of $250 million. So it is significantly larger than Cult Food Science. We also have skin in the game, as I mentioned, how much of the shares are owned by the management team. And for Cult, this is not that much, unfortunately. It's less than 1%. So for ANIC, Jim Mellon, the founder, personally holds 13% of Agronomics. So he has a very high interest of making Agronomics successful because a lot of his own money is invested in it, which I always like. Then you have the portfolio. Cult has 13 investments, whereas Agronomics has 18 investments. But they are older and much bigger, so that is understandable. The company overlap of these two companies is very interesting because they have only invested in one overlap company, which is Ohio Valley. All the other companies are entirely different from the two portfolios. Then you have the ownership percentage in their portfolio companies. So for Agronomics, it's usually above 5%. So they own up to 11 or 12% of some of their companies they invested in, whereas Cult Food Science generally has below 2%, except for some exceptions. And then there's the portfolio companies overall. My impression from them is that for Cult, they are rather young and small, whereas Agronomics has some of the really big players in the space, like Mosamid, Blue Nalu, and so on, that they have invested in. So it's more of a stable play compared to Cult, which I think is a little more risky. So let's boil all this down into some conclusion. Tomorrow is the IPO, and what should you do? Obviously, this is not financial advice. Always keep this in mind. I'm not recommending you to buy or sell any securities here. The IPO on the Canadian Securities Exchange will happen tomorrow, January 17th. And an advantage of Cult that speaks for buying them, I would say, is that they offer exposure to private companies in the early startup phase in all sectors of cellular agriculture. So I like their portfolio in terms of diversification. They have many companies from many sectors, so they have a wide array of exposure to the market. A negative point would be the operating costs. As we've seen in the financial statements, they plan to invest about $500,000 Canadian dollars in the coming year, but they have operating expenses of $1.2 million Canadian dollars, which is almost, or the biggest chunk of that is marketing costs. So I'm not really happy with that. I would rather spend the money on more investments. Another positive point is that they have almost no overlap with Agronomics. So if you're a stakeholder of Agronomics already or want to buy both of them, you can really diversify your portfolio even more because the portfolios almost don't overlap. And finally, another negative point that the management team doesn't have much skin in the game in terms of shares. I would like to see the management team be more invested financially into the company so they have more motivation, or even more motivation, let's say, to make the company a success. So for my final personal conclusion, I would probably invest a small amount if I could. I checked my brokers yesterday and none of them can trade the Canadian Securities Exchange, so I would probably not be able to buy shares myself. But if I could, I probably would, rated proportionally to ANIC in market cap ratio to see where it goes. So I would allot maybe like 4 or 5% of my Agronomics investments to Cult Food Science to see where it goes. I think it's a little more risky and I prefer Agronomics at the moment, but I would definitely be interested in how Cult develops and what they have in store for us in the future. This is not financial advice, keep this in mind. Now, what do you think of the Cult IPO? Will you buy at the IPO? Will you wait a little and buy later? What are your price predictions for the start and maybe at the end of the week? Just let me know all of that in the comments below. And if you found value in the video, give it a like, do all that clicky stuff, and I'll see you in the next one.